Everyone. All right. Thanks so much for joining us, folks, and welcome to the very first day of Supercharged, our 3-day Revenue Excellence Summit. Today's event is brought to you by the team at Modern Sales Pro. For those of you that are not familiar with MSP, we're the world's largest and highest quality sales management and sales leadership, sales and revenue ops, and sales enablement community. Our mission is to create an environment for our members to answer the toughest revenue questions out there. If you're not a member yet, you'll be invited to join after the summit, and I hope you will. This summit would not be possible without our amazing partners who you see on this slide here. So snaps, kudos, claps, jazz hands to them for making this happen. These partners are not only sponsoring the specific event, but for all 3 days of our summit. To learn more about our partners, click on the sponsor booth at the top of your screen in this event page and check out all the ungated valuable resources that our sponsors have made available just for us for this week. But let's talk more about the summit. So this week's summit will be full of ways to get your team supercharged. Whether you're in sales, marketing, customer success, or product, there will be content for you. This is the second event of our summit, and we're so excited to have you here for this panel. It's going to be great. If you want to see what we've got going on for the rest of the day and week, visit the agenda tab at the top of the event page and see the full schedule of events. So here's our agenda for this section. I'll go over some housekeeping notes. The speakers are going to do an introduction of themselves and tell you how awesome they all are. And then we'll get into the content. We'll have some time for live Q&A, so please make sure to put your Q&A in the chat. And then we'll wrap up with some key takeaways. But before we dive in, I just want to go over some housekeeping. First, this event is being recorded, and you'll be able to access the recording and the key takeaways on the summit page of the MSP website following this event. Second, if you have any questions for our speakers, please use the Q&A function at the top on the right hand of your screen or in the chat as well. The chat's wide open, so please interact with each other, network, let us know where you're joining from, and what did you think about the last panel if you were with us. And so with that, I want to get started. I want you guys to hear from this incredible panel. They have amazing chemistry, and it's going to be fantastic. So I'm going to hand it over to the one and only Ann Lai, who will be our moderator for this morning's panel. And then I'll be back later with some closing remarks. But with that, take it away, Ann.
Hi, so I'm Ann Lai. I'm currently a partner at Bullpen Capital. We invest in early stage companies from B2B to direct to consumer. Historically, prior to joining, I worked with a lot of companies when it comes to like growth metrics and fundraising. And before that, I actually ran growth analytics at a handful of verticalized SaaS marketplace companies. I'll be moderating this panel, so we'll be together for the next hour or so. I'll let the other two folks introduce themselves. Liz, do you want to go first?
Yeah, happy to jump in. So I think similar to many on this panel, I'm jumping from operator role to VC over time. I started my career working for some early stage startups. Ended up getting acquired into NetSuite and spent 8 years building out different parts of go-to-market at a public company. And then my last 6 or so years, I've been in venture, first at OpenView Venture Partners, and today at Stage 2 Capital, where we invest in B2B software companies, generally in seed to A round. And I think, one of the huge polls for me in talking to this group is when you look at our LP base and kind of where we spend our time, it's all around go-to-market, sales, marketing, sales operations. That's kind of the network we built and feels really well aligned.
And Doug.
Liz, do you remember, I think I was actually out at your office in Boston many, many years ago. I think I was chatting with you and Devin.
Yeah.
Just about like the whole platform team and what y'all had built. I don't know if I ever told you this, and this is a total little tangent, but when I was at your office chatting with you and Devin, I got a call from Jason Green at Emergence, and when I peeled off to take the call, he was making me an offer to come work at Emergence.
That was the moment. I love it.
That was the moment. While I was in your office, the OpenView offices. Isn't that wild? That's just great. Dawned on me. I was like, wait a minute. Holy smokes. That's what I got.
I do remember that.
Hey, everybody. Doug Landis. I'm a growth partner at Emergence. The way I like to think about myself is I'm a marketer. I'm a sales professional wrapped in a marketer's body. As Liz mentioned, we're definitely non-traditional VCs. I don't actually write checks or even take board seats most of the time. I'm predominantly free go-to-market consulting for all of our portfolio companies. I'm a builder. Funny enough, we talk about all these early stage, startups that we all worked at. I actually worked at some of the early stage startups that became really big companies like Google and Salesforce and Box, Oracle way back in the day. If you want to go there. And now I spend all my time dealing with these tiny little companies that are trying to decipher between their head and their big toe and figure out how to not to get in their way, and how to make everybody wildly successful. So this is gonna be a fun conversation because we all have very strong opinions and crazy experiences. So hi everyone.
Great. So, as the topic says, right, what we do as VCs is we're always trying to pick out what we think is a company that has product market fit, that has the ability to reach unicorn status. So how do you guys, assess companies? Would love to kind of hear a little bit about how you guys think about it, what you guys think are priority, what stands out in a pitch for you guys when you guys are talking to companies early on. And I know we all talk to companies at different stages. So, obviously feel free to kind of elaborate based on the stage that you're talking about.
I'm happy to
Liz,
kick
have
off.
at it.
Yeah. So I guess first setting this stage in which we invest. I'm spending most of my time with companies that are pre-seed to seed, maybe even like just getting started. And so if you start with that context, most of where like what I'm thinking about in those early conversations is market and founder or founding team fit. Like, why are you the right person to do this and solve this challenge at this time? And obviously we need to find the idea compelling and we need to feel like there's like the market to go after. But to me, it's the connection and intersection of the team and market that matters the most at that point. So assuming like I see that, the next thing I start to think about is figuring out like what is differentiated about this idea product team, and then how they're investing in building and like widening that moat. And I think there's a lot of questions you can ask yourself in those early days, but making sure that you actually think this could actually grow and could be different and could be truly differentiated from what else is in the market. Lots more to think about there, but I'll pause on those two and let Doug jump into.
Hey Liz, I have a question for you, because oftentimes when you're pre-seed, you really, in many cases, you don't really have a product. Interestingly enough, we just invested in a company that actually doesn't really have a product yet either.
Yeah.
And I think, for us, in order to get confident or comfortable in making this investment and really believing that there is a there, because we still don't really know. I mean, it's kind of finger in the air, it's gut, it's whatever kind of due diligence we think we can do. But I think at the end of the day, we're making a bet on the person or the team. And largely, if you think about, where unicorn status comes from, yes, the market has to be there. And we'll talk a little bit more about that. And yes, the product needs to be differentiated. But I feel like at the end of the day, one of the things that I've learned as an operator turned VC is we're in the people business and we make bets on people.
Yeah.
And we think that these people who can hire the right team, develop the right level of salesmanship around the idea to be able to go raise capital, to go get the momentum, in the market, if you will, but also to be able to make the right decisions to pivot if necessary. And it's interesting. One of the things that I'm dealing with of late, which drives me bananas, is these early stage founders who've never done this before. I find are slower to make really important decisions, maybe because they overanalyze, because they don't want to make a mistake or what have you. But the seasoned founders that we love to invest in because they've done it before and they kind of know what they're likely going to face, they're so much easier to bet on because they know how to make a decision and they know how to, like, okay, we need to pivot, or okay, we need to go into this market, or okay, we need to focus on these product capabilities. I'm curious, when you're kind of in that pre-seed stage, what are those it factors that you're looking for? And this is for both you and Anne.
Yeah, I mean, first of all, I fully agree with you on that. And I think actually you started to touch on the most important one, which is like, who are they surrounding themselves with? And whether it's a first-time founder or a multi-time founder, we spend a lot of time with the team and with the advisors of the business and early investors, because, that founder is only one small part of what it takes to execute on this idea and this vision. And their ability to go find and recruit and convince like A players to work with them, I think is one of the better indicators of, what's to come. And then the second thing, I try to land a couple of like coaching points, and I'll put that in quotes because it comes in so many different flavors, but we try to see how they react to feedback. Do they ask questions? Do they hear you out on it? Do they act on it? And not to say like we're always right? It's more like, what do you do when somebody gives you feedback? Do you immediately go to this defensive place of like, no, you don't understand? Or do you like try to dig into it and figure out how it could be applicable to you? So that coachability piece, I think, is one of the bigger things we look for. And
that's so. By the way, that's so Mark Roberge of you.
Is it?
Well, in his book, that was like the thesis on how to hire salespeople is coachability for him.
Yeah, it's similar with the founders.
It's true.
Even as I'm saying it, like coachability is such a weird word because I don't mean like blindly coachable. Like I just want them to be able to engage in a conversation, right? And actually like hear feedback and internalize it. I actually prefer somebody like who will hear feedback and then be like, no, like you're wrong for these reasons. And I'm like gonna really like stand my ground. That's awesome in some cases. It's not okay to just like dismiss it. So that's what I think about.
Yeah. So I'm curious, Doug, what do you use to assess team?
Team.
Is it that they've done this before? Like, what do you think that leads to when it comes to bias, etc.?
So, I live in LA now, and just for context, I'm also a professionally trained actor. And one of the things about, I know, super random, but one of the things that's really interesting when it comes to like Hollywood and film and TV, when you're looking for kind of leading characters, you're looking for an it factor. And in Hollywood, I mean, to be honest, like, look, I'm not in Hollywood. We don't invest in anything of that nature at all. But it's like, I think in the venture world, we're also looking for that it factor. The founder, CEO that has, what's their superpower? Is it industry knowledge and experience? I'm working with a team right now where the founder has been in the industry for 15 years and like, built some of the early products of now some of the kind of nascent players in the market. And, when we invested in Eric at Zoom, I was like, well, yeah, hello, he ran product for WebEx. Duh, that's kind of perfect. Right. So we're looking for like, do they have industry knowledge and experience? Do they have a network, to Liz's point, that they've surrounded themselves with that isolate or kind of not isolates, but really solidifies their position to be able to gather the right intel, build the right product capabilities, really go to market exceptionally well. And, we're also, look, at the end of the day, when you invest in as early as we all do, because we do series A's and B's, and we're starting to get kind of like pre-A's, seed-ish, because everyone's coming down market because it's so damn competitive.
To say we're all getting pulled that way.
Yeah, we're all getting pulled that way. But at the end of the day, it's a long journey. You got to like the people that you're investing in because, so they have to be likable. They have to be credible. And so we do a ton of back channeling. I imagine you all do as well, but it's like, yeah, we're not going to just look at the people in your immediate circle and talk to them. We will, but we're going to go find people who you may not have ever considered to be a good back channel because we want to know everything. We want to see the whole picture of who you are, how you think, how you make decisions, how you lead. Are you emotionally aware of your blind spots and your weaknesses? And it's okay because we all have them. We don't expect you to be perfect. We just want you to be aware and a good person to work with. We've turned down a number of deals that were like probably financially amazing deals, but it was just like, no, we don't want to work with that person or that team because we don't like them.
Yeah. And for us, right, like our whole thesis is investing in overlooked founders, basically. So for us, it's all like, it's about team, but from a different perspective. Like we don't really care about experience, whatnot. It's about like authenticity around the problem. I think that's super key where you're talking about pivoting, right? Whether you come from a place where you really understand and care about the problem that you're solving when you're building a product. And like, industry knowledge, whether it's because you were like third generation construction company or, family farm running originally or whatnot versus being in Silicon Valley, having worked at Google, et cetera. So our founders tend to look less experienced, but I think one of the things I agree with Liz is like coachability is very important, but it's also the responsiveness, right? We do a lot of exercises with our companies, less back channeling, but a lot of live exercises where we're like, okay, let's go through the financials together. Like, why do you have burn here? Why do you have this? What if I gave you another mil or less, a mil less or whatnot? What would you do with that? And I think seeing how they collaborate with the investor is really important, at least for our model, right? Because a lot of ours is actually we're trying to build a network around them and guide them to how to be a tech company from an authentic problem perspective, right? And then, you know, their ability to kind of evolve, you can see through the process of like discussing the product roadmap or going through the financials and doing kind of that exercise. It's a little different, obviously, but that's why we're in this like pre-A pre-consensus category, right? We do a lot more hands-on coaching of our founders in that transition into more like mainstream, I suppose.
Can I flip that on its head for a second? Because
Yeah.
it's interesting. I agree with all this, and I like we are also doing these back channels and references. How much do you find that like founders are doing it on you? And are they asking you for references? Are they doing back channeling? Because I call this out because I
I
think
get this all the time. I literally, but you know, it's pretty easy to find, and I feel like they're just like, hey, so and so, because a lot of my founders are on text basis or Slack basis.
Okay.
So they'll just be like, and so texted me, etc. And I was like, oh, awesome, win. I'm like, please do all the back channeling. I would love all of that. You know,
I mean, the good ones do.
You're so like
that's what I was gonna say, Doug. I don't think there's enough happening.
that it almost like immediately happens. I don't know for you guys where it's a little bit. I mean, Emergence certainly way more established, in terms of like PR and media. So I'm curious what happens with you guys.
But at the end of the day, so like for any founder that's listening, or if you're ever going to start a company, you've got. In fact, if you're going to look for another job at a company, think about the investors and don't just think about the companies, whether it's Emergence, Sequoia, Benchmark, Battery, Stage 2, like
brand versus
you got to yeah, like it's the person, it's the actual partner that is going to be involved in the deal. They're the ones that influence the founder CEO and help to make those recommendations and can take the company into the ground just as well as, you know, elevate the company into a whole nother stratosphere. But everyone should be back channeling at the end of the day to just find out what's their working style. How engaged are they? How you know, what do they like when things are not going well? Because guess what? Things aren't going to go well. And are they on top? Like, are they a micromanager to a degree, or are they sit back and just show up to board meetings and drink, you know, expensive wine and look for the, you know, the graphs that show up and to the right? You know, I think one of the things that often doesn't happen, which drives me bananas, because this is sometimes when I'm like, I wish I was on more boards. But and I'm curious as to your thoughts, both of you, is like oftentimes these early stage companies, even at the seed and pre-seed and Series A, they don't decide what their board meetings are for. Right. So they go to these board meetings, and then I go to these board meetings as like an observer, and it's like this dog and pony show of freaking rainbows and unicorns. And it's like, and then I sit there and I'm like, I'm going to call bullshit on all of this because this is not really what's going on. So can we just talk about the hard things? And then, you know, I'll get a note back and be like, well, this isn't the place for that. And I'm like, well, then what's the point and the purpose?
What is the
what's the point and the purpose of this?
Yeah, all of my boards, I level 7, like we have 20 minutes to cover all these metrics that we agreed about. Update me, and then you have 2 topics that we deep dive and where I can be helpful on. Other stuff, you have me on Slack anyway, just text me whatever. And then it keeps the board meetings not so exactly like showy.
We're pretty similar in that, and I will say as an added step, I think smaller boardrooms are better, particularly at the stages we're talking about, and more and more I'm seeing this lean towards like a 7-person board at the B round, and like it's way too big. You don't make decisions and you don't move fast. Like cut it back to 3.
Also, I don't understand why everyone wants a board seat. Like for me, I know exactly like B, C, where, you know, a growth stage firm, once they're in, like I'm happy to like leave.
Yeah.
You know, like it's in good hands. It's not my expertise. Like mine's certainly a lot more from product market fit, initial setup, getting to that point. And then it's like scaling and building team into an IPO. Like somebody else should take that. But I do understand, like sometimes these boards are so big and people aren't helpful anymore. And everyone's trying to impress everyone else for future deals. Almost is a little bit what I do too.
So that was an interesting like coachability moment I had on a deal that I recently worked on where we were leading the A round and there was already a 4-person board, and we were saying, all right, well, we can go to 5, but like let's take it back to 3. And, we had a series of conversations on it. I also talked to the earlier investors, but the moment for me was the CEO saying, I get why you're saying that. And that actually would be helpful to me too. I know that we're going to raise more capital. I need to actually start doing this work now. And he went and had the difficult conversations and made sure that everybody was aligned and set it up right from the get-go, in my opinion. But it was an interesting, it was an interesting model to kind of watch come together to actually take it back in the A round.
Yeah. Well, so we've talked about some qualitative stuff. We've now also talked about what we cover in some board meetings as companies grow. So as companies launch and then they're in the market and they have data, how does your perspective on assessing a company shift?
You want to start, Doug?
Yeah, well, I mean, I think at the end of the day, it never it starts at the very beginning with data. I mean, you never stop thinking about the data or paying attention to the data. It's a matter of now you have oftentimes in the early pre-seed and seed stage, they just don't have enough data because it's still so early. So when they get to Series A, when they get to us, it's certainly much more of okay, now here are all the metrics that we want to make sure you're tracking. And this is the way we're going to kind of measure the performance of the company. And so hopefully, if they've worked with either Bullpen or Stage 2, they've already got that all set up. So by the time they get to us, we're like, all right, cool. Now we're going to double click into each one of these metrics, whether that's, I mean, look, everyone, yeah, top line revenue growth. Cool. Who cares? We get that. It's all going to be up and to the right. We're looking for customer love. Daily active users over monthly active users, which is not enough people pay attention to. We're clearly, it's funny because at Series A, everyone's like, well, what about churn? It's like, how many of your customers are actually up for renewal right now at this point in time? I mean, yeah, let's look at those and let's look at the health of those customers in particular. But you're not going to have you ideally shouldn't have a whole lot of churn or kind of even renewal data at that point at the time we get engaged, because we're doing Series A's right after Stage 2, which in some cases, by the way, could be 6 months after they just raised their seed round,
or 4,
or 4.
What I just did. Yeah, Doug. I mean, it's funny to
I feel like
build on that though.
There's multi layers to the churn data as well, right? You're talking about contract churn, but you could talk about engagement churn if you already have monthly active user, right? Sure. So really, I think especially for SaaS, right, a big part of it is whether customers, you're right, love the product. If they love the product, they should be regularly engaging. And if so, and accounts cohorted monthly churn, and retention over time, that's equally telling and a precursor into whether there's contract churn, right? Because if people are using it all the time, unless there's really a budgetary issue, is probably going to get renewed. But if they're not using it at all, it doesn't matter if you have a 12-month contract, a 13-month contract. When it's up for renewal, somebody's going to axe it, right? And be like, nobody's using it. Why do we care?
Unless they also see fewer and fewer annual contracts, just for what it's worth. Like that. Really? Yes. Yeah. I mean, there certainly are still annual contracts, but I'm seeing way more usage-based pricing, take rate, month to month, a lot more. I'm also spending a lot more time on more of the self-serve and PLG type companies.
So the self-serve, definitely. I feel like every time when they're starting to upsell and move up market, every advisor, every board meeting is should we move to annual? You should sell
for sure
3 to 5 year contracts instead. Here's the new thing, right? And then it and then they just blend it into the same monthly churn number, and now it looks like it's up into the churn has gone down dramatically, except no, it's just blending in annual contracts, right?
Yeah, and maybe zooming out for a second, I think to build on what you were describing, Doug, I've always looked at it as sort of the data requests and the things we're looking at build over time. Rarely do things go away. And so in the earliest days, we're looking at product engagement because it's what we have. Then we're looking at the start of monetization. We can start looking at churn in a cohort basis, and to your point. And then we're going to start layering in revenue. And then we're going to start layering in unit economics.
Growth, same account spend, same account usage, head count, contact, whatever is the most useful engagement metric, right?
Yeah, and all I was going to say there is I think the important thing is to start focusing on what the leading indicators are before because everybody wants to anchor on the lagging indicators, which is revenue, right? You can see it, but the important thing early on is what are you looking for that's a sign that customer is healthy? And it's interesting because I think the default is to think about logins or use, but in some products that actually doesn't fit. I work with one company where best case scenario, they log in once a month, do the thing, it works, and then they come back a month later to do it again. So like you're not
Yeah.
trying to drive them into the product daily. So we
Yeah.
have to really like be thoughtful about what is the behavior that actually delivers value to the customer and how do we measure that. So I think just
I think
taking that
that's
sort of like
really
first principles view is really important.
I totally agree. And I think that's an aspect, I think VCs are gradually getting better at is not, or not, depends on the firm. Certainly seen different schemes of this where they have like their set of cookie cutter metrics, like 12 months NRR, blah, 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 et cetera. And you're like, is that even the right number? Like, does it matter? Like, what if it's not, what if it's a seasonal product? Like, how are you going to attune for that, right? Like, or if, like you're saying, it's not a login based product, it's just a live API. If you're always thinking it's always good, right? So like, should it be by endpoints or something else, right? And I think that takes really like VCs understanding the product to be able to ask the right metric questions to do the right diligence, right?
Yep.
So how do you guys actually curious? How do you guys like, do the diligence process? I know you guys, you guys totally have different team sizes, I'm sure also. So like, how do you establish this like level of thinking when you have, if you're doing yourself, like, of course, like we can all think about it, but if you're not, how do you think about that?
Well, before we get there, I want to talk about a metric in particular, or a category of metrics in particular that I am maniacal right now about. And for all founders, anybody that's listening, I am challenging every founder on the planet right now to become maniacally focused on pipeline. I'm so tired of the reactions, the lagging indicators, like, oh, like, look, and I'm going to rip on VCs for a little bit here because we've got this ethos of like 3-3-2-2-2, like it's our growth pattern, right? You're supposed to triple, double. Awesome, good for you. Going from 1 to 4, not necessarily overly that difficult, because at the end of the day, if you've got relatively good product market fit, you're going to get there. You really only need 8 to 10 million in pipeline to get there. But going from 4 to 12, I'll tell you what, that's hard. Because guess what? You need like 25 million in pipeline. You went from needing 8 million in pipeline to 25 million in pipeline. And all of a sudden it's like, okay, we think we can do it, but we don't really have the data to prove that we know where all of our customers are. We know how to get them engaged. We know how to actually really accelerate this revenue machine. You know how many people you've got to hire, butts and seats, get them onboarded. Actually, you know how much support you need for marketing? And I'll tell you what, by the time they get to us at Series A, if there's not a marketing leader in place, I'm telling everybody, like, just cut the numbers, cut them by 20-30%, the revenue targets, because we're not going to get there without having any sort of marketing support. It's just not going to happen. So like, if you're early stage, seed, pre-seed, whatever it is, just get maniacal about pipeline and how you're going to actually get to your numbers, how you think you are, because you need way more pipeline to get to these tiny little revenue numbers, even, and then 12 million is not tiny little revenue numbers.
Like, I feel like there's two places there. Like, do you spend a lot of time with companies building that like bottoms up model and pressure testing like where they think pipeline's going to come from? Or is it more like, once there is pipeline, how real is it?
Both.
Yeah.
I mean, you have to look at both, right? You have to look at, you have to look at where's pipeline come from in the past and what's actually realistic in the existing pipeline today, right? Because oftentimes everyone thinks like, oh, we've got all this great pipeline, or early stage founders got all this great inbound. Oh my gosh, it's amazing. I got to go hire all these salespeople. I'm like, time out, slow your roll, go hire 2 SDRs. I can blow through all that inbound in a month. Hell, I'll do it myself. And then we'll still start to understand what's real and what's not real, right, to determine whether or not the revenue is going to be real, right? So we can look at all this like the founder's amazing, the product's amazing, the market's there. But if you don't know how to go out and get these customers, you don't know how to get them engaged and get them to respond and learn from them about what works, then you're going to have a really hard time scaling that over time.
Yeah, and I will also add on that I think, especially in building pipeline, right? Like, better understanding of the different pockets of ICP and being able to like build them properly is also super important. And I think like a lot of companies in the SaaS space don't have analytics people early enough to look at those things. And so for me, that's one of those things I push a lot early, is to have some type of analytics capability, making sure all the tracking is in place from the pipeline funnel perspective into the product, to be able to have the data to build ICP. Because if you don't have history, you're going to need another like 12 months before you have enough history necessarily to have the data to build anything around ICP. Because it's not like you get 10,000 users a day, You literally have X many accounts. And if they don't convert and you lose all of the data, you can't get it back again for a while, right? And so early collection of this data so we can better scope these things out is super important to get to what you need them to get to. Because also if you just have a terrible pipeline.
I've been on a RevOps soapbox recently, so I'm 100% with you. Like that needs to come into play so much sooner.
It's so much sooner. Like honestly, hire a RevOps person before you hire a sales leader. I mean, it's crazy. Like ICP, buyer personas. By the way, workflow. Like where do all your contacts go once you've actually engaged with them and they're maybe not the right fit right now? Where do they go? What do you do with them?
Yeah,
send them in a nurture database. Like what happens?
One of my biggest things I always say is especially in sales, you have so many different systems, right? People are like, here's Salesforce, here's Gong, here's HubSpot and MailChimp and whatever invoicing system, blah, blah, and the internal database, and they're all not connected. And so there's no way to actually consolidate it. So one of the things I also push really hard is to get everyone to data lake everything, not inside Salesforce, but data lake everything appropriately instead of pump everything into Salesforce. So you can actually run all the SQL analytics type stuff that you need to run to, develop the ICP, also to evolve it over time, right? Because it changes. Whatever ICP was year 1 is not the same as year 5. And that needs to be tracked, which I think also gets lost sometimes if the data isn't robustly being synced at all times.
Oh, how fun to be a founder.
Pet peeves, actually, other than not having a pipeline, clearly.
Oh gosh, what other pet peeves do we have? I know, we were talking about that early on. What are as investors, what are pet? I mean, I think not being realistic about the data is annoying. Look, this whole notion of this painting every picture as being rosy it's not. And let's just be realistic and honest about it. And we'll get there. But if we can't have an honest conversation, I think you were alluding to this earlier, but just being able to have an honest conversation with the founder of what's really happening in the business, and let's go fix the things that we're now aware of, and let's highlight the things that we're not really aware of that we need to go kind of double click into to really truly understand what's happening. That's where the real value is. I mean, Kevin, you asked the question earlier in the Q&A, have you ever been wrong in terms of investing in a company that you thought was going to be a unicorn? And I think at the end of the day, we're wrong all the time. I mean, unfortunately, I think it's 8 out of 10 times we're usually wrong, maybe 7, maybe 9, I don't know. But at the end of the day, it's all about the relationship that you have with the founder to help determine whether or not it's time to pivot or to just shut down because it's not panning out as we thought it was. I mean, I have a whole slew of dead bodies all over the road that, we thought were going to be great, amazing unicorns that didn't. At the end of the day, it's either market conditions changed or our inability to go execute, or we didn't actually pivot early enough and somebody else came in and kind of ate our lunch. But you got to have those relationships with the founders and the executive team to be able to have those conversations.
Yeah, I'm with you. So much of it comes down to execution. If I think about one of my pet peeves, I think it's underestimating what it takes to do pretty much anything. And most plans I see are just overly optimistic on getting things set up. And I'll give an example of one right now where it's we're going to set up a new outbound channel and we're going to set up partnerships, but we're relying on 50% of the revenue this year to come from those things. And when you dig a layer deeper on these things, you're all right, well, sure, technically an SDR could produce that many meetings and you could have that conversion rate. But you've never done that, and we've never done it with this business, so we need to test it first. And so I think a lot of when I think about pet peeves, it's really minimizing the lift it takes to get something off the ground, and how important it is to have somebody who can really dedicate time and space and energy to setting up a channel like that. I feel like it's a thing that I'm seeing a lot right now too. This idea of if I put it in a spreadsheet, it could happen.
I was looking at it,
which I think sometimes is surprising to me. Maybe it's our category of founders, they're so practical. I'm wait, guys, we have to be I know you will definitely hit this, but that's not what I want to see today, right? Can you, give me the slightly more ambitious version when everything works. conservative where would we be realistically, right? So maybe like they should just like hang out and figure it out, just take the average. But
well, maybe that's the like base bare bull plan, right? Like I feel like that actual work is
yeah,
really
because I
helpful.
feel like a lot of our founders are like, we're super transparent, we're super honest. Here's the cut of everything. It could go really badly, but like this is realistically, if market conditions were bad, what's gonna happen? And I'm like, well, that cannot be a number if we want to go further. But we like beating our numbers. I'm like, you know, you're gonna beat it by 20%. It is no longer the goal. And that's back to kind of this like having a show at board meetings. You're like, I don't care if you beat your goal that you artificially sandbag so you could be, so that other board members are happy. And I think that is part of that ethos. But yeah, well, I mean, one of the questions certainly that we see is also from the list is, what do you think prevents the culture of board meetings from changing from what we're describing now to what it would be more beneficial as?
Well, I mean, look, if you think about it, the only thing that the board can actually do besides approve the minutes and also approve, stock grants,
equity
is equity, right? Is hire and fire the CEO. Like the board can't hire and fire the go-to-market team. They can suggest it. They say, I don't really think that they're the right person, but at the end of the day, the board can't sit there and vote like, we vote that the sales leader's out. But they can certainly vote to remove the CEO. And I think what happens is CEOs get really paranoid, and it's like, I've got to present everything, and it's got to look just incredibly positive all the time. And they don't set the stage. I mean, oftentimes too, it's also early stage investors don't really work with the boards well enough to say, hey, there's 3 different types of board meetings we may want to run. The tactical one, we're going to go over the metrics. Maybe we're going to do that for the first 15 minutes every single time. And then we're going to devote 30 minutes to what does the next 3 to 5 years look like? And we're going to brainstorm. And, or this one's all tactical because we've got 2 big problems that we need to solve for. It's all about kind of setting the expectations up front as far as what the board itself is there to do and to respond to. But traditionally speaking, it's just been like, hey, just show the numbers, send out the deck ahead of time, walk through the numbers, have each division head or functional head, talk about their function, and then we go out and have dinner.
Do you guys,
I think it's super effective.
Do you guys levels? I know, Doug, you're not in as many boards as you're like, but I guess like for both of you, do you guys level set when you guys invest in terms of like how you would like future board meetings to be as like preset?
I send the new agenda.
Okay.
So like one of the first things, I mean, I talk about a pre-term sheet too of like expectations on it, but the way I tee it up is like the board works for you. It's like your job to make these meetings effective and to get what you want out of your board. Like kind of to your point, like I need these few things to happen. I need there to be governance. I need there to be like basic reporting occurring that we can see. But most of that can be done in email. Like this time that we're setting aside is for you. And so it's your job to get what you want out of it. And so I usually propose, kind of to your point, pick a couple of topics that are top of mind. And I do think there is an aspect of giving leadership exposure to the board that is really positive. And shows like that you're investing in those people. It also allows us to have a more direct connection to the business. And so what I don't like the like parade everybody through and give status updates, but I do think if you're going to do a couple of like meaningful deep dives on topics, making sure that the functional leaders are there to actually lead that discussion is really important. And then I don't know, to your point of like sending stuff in advance, like we all have to be better about digging into that and asking the right questions ahead of time, but it's really hard to do on like 12 hours notice. So I'm like encouraging people to send stuff days before and like really give us time to actually get into it.
I totally agree. I totally agree.
Level setting is great, especially when we're in earlier. It almost like, especially for us, like there may not even be proper like board structure or governance before that. And so in level sets and kind of coaches them to handle going forward as well. Yeah. Like, this is not like I just tell you numbers, everyone's happy today thing. And so, yeah. And I feel like, it's also what you're saying, like your relationship to founders, right? If your relationship to founders is of trust on some level, they're less likely going to dog and pony show you.
Yeah.
Because you kind of know what's going to happen anyway. You already know.
Trust.
Why are you lying to me?
But that's also why, as a founder, that it's important for you to back channel and build a relationship with people who could potentially be on your board. Like go on a walk with them. Like go do something like to like break down the barriers of these Zoom calls so you can actually get to know them as a person, be like, is this the kind of person that I could have a real honest relationship with, where we can share some really difficult problems that we need to try and resolve? Because at the end of the day, we're in this for the long run.
Right.
This is a long-term relationship. Unless, of
social
course, you
media
want
stalking is another great way to do it. Just like check out some investors' social media. I think it's super telling. Especially like Twitter, Instagram, whatnot. Like I've done that with like downstream investors. Sometimes I'm just like,
yeah.
And I have no social media. You're gonna hate looking into me.
No, I don't really.
You know what's?
I mean,
Liz, you don't have any social media. It's crazy.
I shut it all off. 2017.
It's the people that write like 10,000 things, and you're like, VC's job is to pick. Yeah. That is my other thing. If they say VC's job is to pick, likely when something goes wrong, it's not going to be great.
Yeah. Hey, here's a question for both the two of you that Sue asked, which I actually really appreciate. It's like, so you've got a an idea, a product, what have you, but you didn't go to Berkeley or Harvard or Stanford, MIT, what have you. So like, how do you network to get to know these kind of pre-seed, seed stage investors who you want to pitch to, potentially? Like, how do people get to know the two of you? Yeah. How do early founders that don't have these networks from their grad schools, find you two?
Total mix of things, but I'll say, as I like look at my own like inbound and where things come from, a ton of it comes through network connections, but a lot of those network connections are actually earlier stage investors, and so there is this stacking that happens. But as I think about access to the earliest ones, it's like some combination of like accelerators and incubators where you're going to get like put on a stage and get some actual exposure. And then it's an obscene amount of cold outreach and networking. And so if you don't have the built-in network, you have to create it. And I think about actually one of the deals I did recently, literally the founder reached out to me on LinkedIn and asked for a piece of advice. That was the opener. And we got on the phone and we like talked about that, and that opened a conversation, and then we kept talking. And it's really, it's really impressive to watch what he did. And obviously, like now that we've invested, I kind of like went back and was like, hey, can you like walk me through that process? He had hundreds of these. He wrote a list of all, he pulled a list of all the people that invest at the very early stages. He looked at the kind of deals they did. He prioritized them, ranked them. I mean, he ran a system. I think you can actually break through with that, but it takes time.
I mean, end of the day, fundraising is like a sales process. Like, you should know your ICP.
100%.
You know their biases. Like, we internally have a CRM that we use kind of in that way. But like, I think what's important is also like, for me, actually, a lot of my inbound is from founders. So I work a lot, like we said, we work with a lot of very specifically what you're saying, like overlooked founders. So like people that don't know people, or people who get shot down because they don't look like all the other founders. And there is almost like a support network group of these founders who will be like, okay, you got to talk to Bullpen, or, oh, female founder, you got to talk to Ann, or like whatever. And then that word of mouth is really important. And I think that's also where like, I would say like reach out to other founders that are similarly categoried, or that you like their investor list. Cause that's another thing you can look up. Similar, not like exactly the same, right? But certainly like similar companies, category wise, stage wise, etc. See if you like their investors. If you do, reach out to the founders. That's actually really easy to be like, hey, we'd love to understand, blah, 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 especially like, our backgrounds are similar. We didn't go to these schools, or like alumni that's also done startups. And then after a conversation, get them to intro you, because a founder referral is usually much stronger, at least for firms that are like ours, than, coming in cold or like random accelerators. And that you give up more equity anyway. And also, I think there are a lot of these kind of like founder support networks are really nice, especially for folks who don't have the mainstream Silicon Valley ecosystem.
Yeah. But to Liz's point, LinkedIn works well, because I get a lot of pre-seed, seed stage companies. I'm like, I don't invest in that. But if it looks interesting, I might take a look at it and then pass it on to all my people in the pre-seed, seed stage community. So like it can come down from the top. For us, by the way, just a little bit more context. Once you get up into the A's and the B's, when we look at the end of the day, all we look for are unicorns. I mean, that's what we're banking on. We don't look for companies to get acquired. We don't look for quick hits, turnarounds. We're looking for multi-billion-dollar standalone iconic software companies. And so that's the kind of the first thing that we anchor on. But at the end of the day, if you back up, we are a thesis-driven investment firm. So we have core theses that we are that we are maniacally focused on. Right now, like we're super hot on Web3 and what does Web3 look like? And there's the platform side of Web3, there's the application side of Web3, there's the ecosystem side of Web3. And so one of our GPs and his associate, that's all they're focused on. So anything that comes in for Web3, pass it on to them. Like, take a look at this. Our core thesis was, everything, all software is going to move to the cloud. That was 16 years ago. I think that was a pretty good bet. 17 years ago. And we've got a vertical SaaS thesis and a coaching networks thesis. And so for us, we're looking for the companies that are doing something amazing in those kind of domains. And largely that is what, many firms are doing to determine where is that unicorn coming from. Because we're not going to invest across the board in everything that is, SaaS based. It's just not going to happen. We're not big enough. We don't have enough people to do that level of due diligence. So we believe in getting hyper focused in that regard. At the earlier stage, seed and pre-seed, I'm curious for both of you. Are you both thesis driven, or
No,
how do you?
Driven. Ours is overlooked, which means, categories people don't like, founders that aren't mainstream, whatever it is that people think is weird, but actually has really strong,
weird. I love that.
Strong metrics, weird. But we also look at metrics differently. We don't look at top line. I could care less about top line, honestly, at how it grows, etc. That's really fakeable. And so for us, it's really really understanding, like what we were saying, understanding the product, asking the right questions, trying to get early signals around product market fit, using kind of non-cookie cutter metrics, and then kind of assessing whether it is a company that has the potential to cross over into mainstream. And we don't necessarily think about it as unicorns only, because end of the day, was you're early enough. And typically with our stage, because they're seed plus and they're kind of overlooked and they need help, we can get in at very good valuations comparatively to market, reasonable valuations, post revenue, post traction. So even though we're seed plus, we always have traction in the companies that we're looking at generally. And so a lot of it's, as I usually describe, it's a little bit like, flipping a house. So we approach it a little bit differently. We're just where the foundation and everything and the location's amazing, the views are amazing, but you might need to spruce up the bathroom or open up the kitchen floor plan, and we help them do that.
I love the analogy.
Yeah, the analogy is great. And then we come in, we're like,
and then we pass it to you guys, and we're like, no, it's cool. Exactly.
That is tear it down. We want a modern farmhouse with a pool,
And now we know if you have a massive pipeline, I will note that in our CRM for you.
It's amazing. And we're kind of mixed. So I would say generally, we're all opportunistic generalists, but we have themes that overlay it. And so, depending on the sector or the industry type of company, it may go to one of us, but anybody can look at anything. And I think you did hit the nail on the head, though. It's you can't go source across all these things. So you're relying on a lot of inbound flow and your networks in order to do that. And then we go proactively source against a few themes.
We do have a lot of data. So my background was originally also I sourced alternative data sets for Wall Street. That's what our group did. So we do have a lot of alternative data sets that we also use to flesh out sourcing per category as they come in. So if we have a cluster of things, say around construction tech, we'll kind of grab a cluster around it and just run some high level alt data comps, basically. Cool. So the data part helps.
So I think Kevin asked a really interesting question, which is kind of building off of what you both just talked about, which is, have either of you ever believed in a company so holistically, but others in your firm did not? And how did you kind of convince them that this was a good bet to make? It's a battle, by the way. I mean, look, at the end of the day, Kevin, just, internally, we are selling internally as well. If I've got a company that I'm really excited about, I'll partner with one of our GPs, and the two of us will then bring it to the table, and we've got to have our ducks in a row.
Are you guys
why we believe this is the right play?
What's that depends on the firm.
Yeah, I was just gonna say, are you guys a consensus? You have to have Do you vote?
Unanimous, majority, yeah.
So the interesting thing with the way we operate is a little different. We're a little backwards from everybody else, but we believe in this thing called unanimous enthusiasm, right? And so interestingly enough, we actually, one of the things we do is we bring the founders in early to present, and then we decide whether or not we're going to actually make them a priority, and then we all dig into the due diligence. Yes, we have to do some due diligence ahead of time to determine if this is something we want to bring to the partnership, but we basically create our list of like what you have to believe, and then if there's specific questions that people are uncomfortable with, or they're not really feeling it, then they'll bring up their objections. Hopefully we've already thought about them and tried to anticipate them, and then we'll spend some time trying to overcome those to determine whether or not this is something that people can get really behind. But at the end of the day, everyone unanimously has to be enthusiastic about digging in and doing the due diligence. Still doesn't mean we're going to give them a term sheet, because that just means we're going to go do the due diligence as a firm, and then at the end of that, we did determine whether or not we're going to do a term sheet.
We I would say, like, are very different. I guess, like, particularly at the stage we're investing with such a small team, what we're trying to do is gather feedback and questions from everyone, hear different points of view, but then we're relying on an individual. We call it pods, but we have 2 people working on each deal to build conviction and actually like make the case. And the way we're looking at it is like, our job is to be contrarian and right. And that's like how we're going to make the most money. And so, it's harder to get like 6 people to want to do the same thing. But if you can get 2 people really bought in to build the case, great.
No, exactly, Liz. We're like very similar. Our whole thing is that we're doing pre-consensus contrarian deals. Likely nobody will agree, because then it will be no longer contrarian. So basically, if one partner really, really wants to do it, doesn't really matter. Like, yes, we go through, everyone has feedback or whatnot, but you hear it and you're like, I'm not gonna swear, but I don't give a whatever, and I'm doing it anyway. Like, you have those, like, it's that conviction convinces everyone else in the same way. Yeah. So some of our biggest outcomes have been from situations like that generally. And each partner, I would say, has a different kind of pocket of things they like and expertise from being previously operators or whatnot. So it kind of like blends out pretty well.
Yeah, I think what we try and avoid is the quid pro quo scenario. It's like, well, I'll vote for your deal if you vote for my deal.
And that's why we never do voting, right? It's not a vote thing.
Right, totally.
I'm going to do a slam the table, as we call it. If you're going to pound the table, you can't do it that many times, because then it's crazy. Like, it's more that view.
I also think this is very indicative of stage, because I think about how OpenView operated was much closer to Emergence, and this is a very different shift for me as well. But I do think stage has a huge role to play in what we're describing.
I totally agree. Yeah, as you get well.
I love Kevin's questions, so I'm going to ask. So, have you ever changed your mind about investing when you realize it's vaporware, and how do you break the news in diligence? It's a great question, Kevin.
It's great for you two. We don't invest in vaporware. We want it proven before we go with that. Drop a $25 million check.
Oh no! Before investing. So
like, how did you figure it out? I can give an example of one. It's a little bit different. It's actually on the pipeline topic, but we got very deep with a company. We're extremely excited about what we saw. We had talked to other investors. We had, seen their last board meeting minutes. And when we finally got into the data, at the 11th hour, we discovered that a lot of what they were calling CAR was actually not. It was pipeline. And they had created this term called VCAR, which I think I told you guys about, verbally committed ARR, which is literally prospects. And so we all of our analysis fell out the window, and we ended up having to pull out of that deal. But that's not vaporware on the product side, but I think it actually is a pretty good example of, you can kind of tell whatever story you want on the way in, and it's on us to create the right level of diligence and openness to actually discover these things. Not encouraging anyone to do that. I'm just more saying it's amazing to see what gets packaged up that you really have to dig through.
Yeah, and I agree with that. We've certainly, another version I see is people are really good at selling a product or a vision, especially at this stage, and you can sell a lot to make the numbers look good. So there's 2 ways I found. One is the contracts are not really real. They're friends and family favor deals, right? And they scale them up to fill revenue growth. The other one, which I found sometimes because we do through a lot of the engagement testing numbers and whatnot in our data requests, their avoidance in answering questions around like whether this is a platform or a software versus a service that I just like hack together with enough human bodies is like something that usually comes up in RDD that we'll have to be like, hey, look, it's not really a tech product at this point. So, clearly there's product market fit for your services. When you get to a platform level, like would love to chat. That's what I usually say. Cause part of the question is how do you break it to them? My version is definitely like happy to work with you guys to figure out how to build a product. This is really exciting, but like it needs to have a product that you can scalably sell, kind of.
Yeah, we just say not interested. We only do six,
we have this thing
8,
where
10
we
deals a year.
love seeing it when it's ready again before other people see it. So we do take this perspective that if it's a good enough service and it has good enough like market fit and there's something in the product, if we kind of help them preemptively do that, we can preempt even the C+. So that's also another bit. Because some of these founders just don't know how to build a product, right?
I totally agree. All right, 2 rapid fire questions. We've got 4 minutes to go. Cliff, I appreciate all of your activity here. Thoughts for either one of you on whether or not a board deck should look pretty and get it out the night before, or can you release it a week before, 4 or 5 days before? That doesn't necessarily look pretty, but it's got all the right content.
Can I throw something out? Let's stop using board decks. More and more, I'm seeing a Word doc that is like, here are the priorities. Here are my thoughts. Comment away.
Totally.
Moving on. Stop trying to be a designer. It doesn't matter.
I hate that personally. I'm like, I don't care about your pontifications on your data. Just give me your Excel.
Oh, so no, that's fine too. But like, I don't need slides.
I set up everyone with like Metabase or Looker, and I'm like, just I could check it anytime I want. Like, you don't even need to like bother me with it. So, but generally, yeah, like if you have to have a deck,
not pretty. What we're saying?
1,000% take the ugly deck early. Like I could care less. Like don't waste your designer time with the deck. Like they should be building product or marketing assets.
Notion docs, Google Docs, whatever it may be, of running themes. Here are the updates. You can timestamp it. It makes it just so much easier versus these fancy decks that everyone creates. I want a company that I actually am on the board of right now. They send out these 3 monster decks every time. They're like 4 days ahead of time. I read through them all. I dig into every piece. I write down all my questions. We go to the board meeting and they literally go through every slide. I'm like, oh, shoot me in the head.
You got to lay down the law. Stop it.
Later. I'm just a board observer. I'm just a board observer. I've suggested it. I'm like, I don't want to be on this board anymore. It kills me every time.
Okay, really quick there's from Kevin. I think this is specifically for both of you, but Doug talked way more about this. What percentage pipeline is needed to cover revenue? In your
it
depends on the company and the business model.
It depends on the company, business model, deal size, sales cycle, but typically it's anywhere between 3 to 5x. Standard issue. And by the way, I think somebody asked a question that we had marked. Oh, Cliff asked a question. I think it was about a RevOps leader running sales. Oh yeah, Cliff. Thoughts on sales being run by sales ops or RevOps person versus a traditional sales leader? No.
I think in a self-serve and like a PLG type business, it's actually pretty interesting because if what you're doing is like a data, like in like architected sales process, product
signals.
Related. Yeah. Beyond that, no.
Yeah. Totally agree. Bam.
Love that. Appreciate you all. Hi. Sorry hopping in. Don't mean to interrupt such an incredible panel, but we are coming close to time. So I just wanted to thank Anne, Liz, and Doug for your incredible insights. Honestly, everyone can sit and listen to you for days. This was incredible. Thank you so much, everybody. And for folks that are joining us, please don't go away. I wanted to share what's next. So with this panel coming to a close, our next panel coming up in about an hour is how to build the GTM strategy of your wildest dreams. So please be on the lookout for that. Thank you all again so much for joining us. If you haven't signed up yet, please make sure to register at the link I'm putting in the chat and join us for the last panel of the first day of the summit and for the next 2 days. So with that, the panelists now are going to head backstage just to debrief and check, but thank you all so much for joining us. All right, take care.